Hi there, welcome back to Weekly. Now you're watching Markets at Noon with me, Kanishka Sarkar, and it's time now to discuss some stock-specific news. Now, Cholamandalam Finance has denied all the allegations that were made by CobraPost, calling it baseless and malicious. The company, however, has zoomed nearly 45% this year so far. And what has led to this up move, and what are the brokerages penciling in what they are penciling in post the clarification? Mitali is here to take us through all of that.
Right, so Cholamandalam Finance and Investment has actually denied all the allegations that CobraPost has posed on them, and also calling them malicious and baseless, and has said that they have not revised their business guidance, nothing whatsoever. Also, if you see, the stock has outperformed all the Nifty and the Nifty financial benchmarks, giving a return of around 42% or 44% year to date. Now, if you see their growth and business mix, the growth continues to be driven by the shift towards their non-vehicle finance segment. Also for FY26, management has given and reiterated their guidance to 20% based on the AUM. Also, if you see the disbursements, the growth on disbursement has been softened to high single digit or 10% growth. If you look at their net interest margins, that has improved to 7.9% from earlier 7.5%, and also management has said that there might be another 10 to 15 basis points of improvement in the second half of FY26. The return on assets, they remained range bound around 3 to 3.1% and will continue the same for FY26 as well. What investors should be watching for the next half will be the key triggers, including a pickup for quarter 3 and quarter 4 disbursements. Also, the growth in their non-vehicle finance segments like LAP and SME running at nearly 30% growth YOY remains central to the story, as Chola is now shifting their away from the focus away from their vehicle finance led model. Also, on the valuations front, if you see, the stock is currently trading at a price to book ratio of 5.5 times. Also, 1 year forward, it stands at 4.23 times, and at a discount from its 5-year average of 5.3 times. While from the brokerage perspective, if you see, Morgan Stanley has given an equal weight call to the company, while Jefferies has given a buy rating for the company with the target price set as 1980. So overall, the growth trajectory for the company stays intact as what the management has guided.
All right, so that's about the management